Hello everyone, this is Ingrid. Today, we'll talk about 2 simple ways that can help improve your risk management behavior in trading. Please like and subscribe to my channel. I know you've heard it before, but good things are worth repeating. Journaling is important if you want to succeed as a trader. With journaling, you can 1. Derive your success rate. 2. Be accountable and be motivated. As you know, trading is a business. You have to answer for the outcome of your actions. It enables you to do more of what brings success, and avoid what brings failure. 3. Identify emotional and cognitive biases that may be affecting your trade decisions. Only with self-awareness can you redirect or change your behavior. 4. Assist with behavioral adjustments that is necessary for trading success. You may be demonstrating these risky behaviors that jeopardize your trading. Not setting stop loss. Moving stop loss. Undertaking greater than normal risk by not following risk rules. Consciously or unconsciously, you are sabotaging your trading success because, deep in your psyche, you are not convinced that these rules help you. Here are 2 steps that had helped me trade better. Hope this will be beneficial to you as well. Firstly, define what is success in trading. You need to have a definition of success, and no, I'm not talking about profitability here. Profitability is the end product, not the tools. The process, which is your adopted trading strategy, and the mentality, which constitutes the emotional and cognitive process which drives trading behavior, are tools that will enhance the profitability of success. We will focus on mentality in this video. Below are some suggestions that have worked well for myself, so I hope you may start considering these definitions of success in trading. It is recognizing that every time you go into the market, your trade has a probability of stop loss. Encountering a stop loss is not failure. It is the market's forces of supply and demand expressing an otherwise intention to your analysis or bias for that particular trade. It is the probability of trading working itself out. Even when you have encountered a stop loss, and you had adhered to the trading rules of your strategy and risk management, this trade is a success. Trading successfully is a work in progress journey on yourself. Once you are aware of your behavioral challenges, then commit to be a little better each day. Some days we may fall back, but it's fine, we continue to develop helpful habits that make us better traders. Know your temperament for trading. Some people are good scalpers, some are good intraday traders, some are good at swing or momentum trading. Pick the one that best suits your temperament and stick with it. Know when to stay out of the market. You don't need to take every single trade. The market is always there. Choose your battles, the ones which offer high probability of success. The strategy that you have adopted should be able to identify these. Having one good trade a session is more than sufficient. The more times you trade per session, the more errors will be committed. One good trade where the rules are followed. This is a success. Secondly, leverage on the power of a trading journal. After having defined success in trading, the next very essential and critical step in overcoming risky trading behaviors is by keeping a trading journal. Why we don't follow risk management rules? It's because we aren't convinced of the necessity for it. We may even be averse because it is hard to look at our trading decisions sometimes. We feel good when we take money from the market, and feel negative when market takes our money. This is the challenge I raise to you. Journal at least 1,000 of your trades and see if you would not be convinced that your trading and risk management will improve. Why 1,000? This will provide enough data to train and convince your mind to recognize and acknowledge the effectiveness of your strategy. The chart analysis that proved successful. You become so familiarized with the chart setups that most of the time you will know immediately if probability is in your favor. You can choose to cut loss early or let the trade work itself into stop loss. There is no wrong in capital protection. The pain of risky behaviors would likely have been ingrained into you by now. It will be difficult for you to ignore risk rules, and you will begin to instinctively exercise good risk management behaviors. From this exercise, it is highly likely that you would have gained confidence in your chart analysis and trading to recognize the probability of a trade working in your favor. Try it out and let me know your thoughts.